Sorry about that. Test, test. 1, 2, 3. All right, here we go. Oh my God. Oh, jeez. Amateur hour. All right. Hello, everybody. My name is Yaman, and I provide daily updates on Tesla markets and technology. Sorry, this is ridiculous. Um, Markets are down today. Dow Jones is down 0.3%. Nasdaq is down 0.6%. S&P 500 down 0.4%. Russell 2000 down 0.7%. Oil is up $1 to $65 per barrel. Treasury yields are up 2 basis points. We have a lot of news to discuss today, so let's get right started. Wall Street subdued after Powell tempers rate cut optimism. Wall Street's main indices were subdued in choppy trading on Wednesday as traders assessed measured comments from U.S. Federal Reserve Chair Jerome Powell and awaited key economic data due later this week. Although the recent numbers point to a resilient economy, commentary from Fed officials has injected some wariness, especially about the labor market, prompting investors to tread carefully. Powell sounded cautious on Tuesday when he said asset prices appeared fairly highly valued. Even as his colleagues staked out arguments on both sides of the policy divide, the Fed chair emphasized the tightrope the central bank must walk in upcoming interest rate decisions as it navigates inflation risks and addresses signs of a softening labor market. The market was somewhat caught off guard by Powell's stock market valuation comments and took that as a sign that perhaps the Fed could be concerned about elevated asset prices, said Thomas Hayes, chairman at Great Hill Capital. Quote, so many managers that sold in April are still behind their benchmarks, so any weakness has to be bought. And I think you're going to see more of that, he said. Consumer discretionary added 0.8% on the S&P 500, boosted by gains in Tesla and Amazon, which were up 2.8% and 0.7% respectively. Amazon advanced after Wells Fargo upgraded it to overweight from equal weight. Energy companies rose 1.5%, while 1% fall in Alphabet led to communication services 0.4% lower. Gains in banks such as JP Morgan, which was up 1.1%, drove the Dow higher. U.S. listed shares of Chinese companies rose, led by an 8.9% gain in Alibaba Group, which unveiled a partnership with NVIDIA. Lithium America's U.S. listed shares surged 89% after Reuters reported on Tuesday that the President Trump administration was seeking an up to 10% stake in the company. Talks are underway to discuss a government loan exceeding $2.26 billion for the company's Thacker Pass lithium project with General Motors, which rose 2.4%. A report also said UBS had upgraded General Motors to buy from neutral. ServiceNow added 2.9% after Morgan Stanley upgrade. Marvell gained 3.9% after the chipmaker unveiled a $5 billion stock repurchase program. Micron Technology fell 1.7% after the memory chipmaker reported quarterly results. Oracle slipped 2.8% after a report said the company was looking to raise $15 billion in corporate bond sales. Freeport McMoran fell 10.5% to the bottom of the benchmark index after forecasting lower consolidated sales for copper and gold in the third quarter. Let's move on. We're going to dig into all of these one by one. Give me 2 seconds. Okay. Fed's Powell strikes middle path on inflation jobs as others take side. U.S. Federal Reserve Chair Jerome Powell said on Tuesday the central bank needed to continue balancing the competing risks of high inflation and a weakening job market in coming interest rate decisions, even as his colleagues staked out arguments on both sides of the policy divide. Quote, near-term risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation, end quote, Powell said in remarks that stuck close to language used last week when the central bank cut its benchmark rate a quarter percentage point. The current rate in the range of 4% to 4.25% is still considered high enough to lean against price pressures in the economy, but leaves us well positioned to respond to potential economic developments. Our policy is not on a preset course, Powell said. While the phrase is something of a mantra for central bankers, it has taken on particular resonance now, with strong opinions emerging on both sides of the policy divide. In the remarks before Powell spoke on Tuesday, Fed Vice Chair for Supervision Michael Bowen said the Fed could downplay concerns about persistent inflation and needed to make a commitment to cut rates in support of a job market she worries may be about to rupture. Quote, it's a lot easier to support the labor market by lowering the Fed funds rate than it is to fix it after it's broken, Bowman said. While the jobless rate is 4.3%, is around estimates of full employment. Bowman said the slowdown in hiring is such that it is time for the committee to act decisively and proactively to address decreasing labor market dynamism and emerging signs of fragility with steady rate cuts. Quote, if demand conditions do not improve, businesses may need to begin to lay off workers, she said. By contrast, regional bank reserve presidents who spoke this week recommended caution about further rate cuts, while inflation remained nearly a percentage point above the central bank's target and the impact of the administration's tariffs and other policies is still being assessed. Quote, with inflation having been over the target for 4.5 years in a row and rising, I think we need to be a little careful with getting overly upfront aggressive, Chicago Fed President Austin Goolsbee said on CNBC on Tuesday. The Fed next meets on October 28, 29, with investors assigning a high probability that officials will cut interest rates again, consistent with projections issued after last week's meeting showing quarter-point cuts anticipated in October and December. But opinion remains divided, with Powell now steering a non-committal path for further data to come on jobs and inflation, while jobs market concerns are now competing more with high inflation in the minds of Fed officials. Powell said there was a no risk-free path for the Fed to follow at the moment. Let's move on to the next article. OpenAI, one of my favorite companies. OpenAI under pressure to meet demand, widens scope of Stargate and eyes debt to finance chips. At the White House this year, OpenAI outlined its lofty Stargate infrastructure project that would cost $500 billion and be developed with partners including SoftBank and Oracle. Now, after some fits and starts, OpenAI executives say the joint venture is far more expansive than previously outlined and involves almost everything OpenAI does related to AI chips and data centers. Stargate was initially conceived as a new company that would invest $500 billion in AI infrastructure. Now, OpenAI executives say the parameters have expanded to include data center projects launched months before Stargate was announced. OpenAI, best known for its ChatGPT chatbot, argues that AI revolution needs competing systems like Stargate to deliver on its immense promise. OpenAI will pursue different creative financing options, some of which have only emerged within the last year. To secure chips for the data centers, the executives added. CEO Sam Altman has repeatedly said that creating data centers is the key to progress, writing in a blog on Tuesday that he eventually aimed to get to the point of building a gigawatt of new AI infrastructure every week. Expanding chip availability was also the key idea behind the announcement of Stargate in January. The initial vision for Stargate, however, ran into delays, executives said. Protracted negotiations with other parties and decisions on locations have bogged down the process, SoftBank's CFO said last month. The sweep of projects in OpenAI expanded vision all have the same goal: to help meet significant demand for its AI tools. Moving on to Trump. Exclusive article by Reuters. Trump wants piece of company in charge of America's biggest lithium mine. The Trump administration is seeking an equity stake as much as 10% in Lithium Americas as it renegotiates terms of the company's $2.26 billion Energy Department loan for its Thacker Pass lithium project with GM, two people familiar said. The proposed stake is the latest example of the Trump administration intervening directly in the American economy, as it has in stakes in Intel, MP Materials, and other U.S. tech and minerals firms to promote industries it sees as critical to national security. Slated to become Western Hemisphere's largest source of lithium when it opens in 2028, the Thacker Pass mine has been under construction for nearly a year. Moving on to Alibaba. Alibaba shares leap on NVIDIA partnership data center plans. Alibaba announced on Wednesday a partnership with NVIDIA global data center expansion plans and new AI products as it positions AI as a core business priority alongside its traditional e-commerce operation. The announcement helped send Hong Kong listed shares of the Chinese company up nearly 10% on a 4-year high on Wednesday as investors welcomed its plan to double down on AI amid grueling competition with local peers that include DeepSeek and Tencent. Moving on to crypto. Crypto ETFs set to flood U.S. market as regulator streamlines approvals. Asset managers are lining up to launch cryptocurrency exchange-traded funds, capitalizing on growing excitements around digital assets while getting a boost from looser regulatory requirements to bring products to market. The U.S. Securities and Exchange Commission's updated standards for ETFs announced last week could encourage demand for exchange-traded products tied to cryptocurrencies, ranging from Solana to Dogecoin. Moving on to Jaguar. UK's Jaguar Land Rover cyber attack shut down to hit 4 weeks. Britain's biggest car maker, Jaguar Land Rover, is extending the closure of its factories until October 1, following a cyber attack in early September that has left its operations paralyzed and smaller suppliers struggling. The luxury car maker owned by India's Tata Motors has three factories in Britain, which together produce about 1,000 cars per day. The company is losing £50 million a week, according to BBC, with many of its 33,000 staff told to stay at home. Moving on to EU. EU asks Apple, Google, and Microsoft what they're doing to tackle finance scams. Apple, Google, and Microsoft have been asked by the EU tech regulators about the measures they're taking to prevent their platforms being used for financial scams, underscoring Europe's concern about the cost of online fraud. The EU is increasing its regulatory scrutiny of major US tech companies via the Digital Services Act, landmark legislation that requires big tech to do more to tackle illegal and harmful content on their platforms. Moving on to Oracle. OpenAI, Oracle, SoftBank, we just talked about this. Skipping that one. Moving on to Bessent. Bessent widens scope for next Fed chair as he looks for someone with open mind. Treasury Secretary Scott Bessent said Wednesday the Trump administration is looking for someone with an open mind to be the next chair of the Federal Reserve as he intervenes 11 candidates to replace Jerome Powell. Everyone asks me what I'm looking for when I interview potential Fed chairs. And it's just someone with an open mind who's now looking in the rearview mirror, who is looking forward, Bessent said in an interview. Bessent expects to complete the first round of interviews by the first week of October, he noted, and he has been surprised by the strength of some candidates, but declined to name them Wednesday. The Treasury Secretary has said that he plans to present Trump with a small list of strongest candidates. Moving on to the Fed. The Fed's unity is already fraying. Last week, the Fed voted to cut interest rates in a decision that expressed unity despite the sole dissent. But a mere week later, commentary from central bankers is foreshadowing disagreement to come. That's because even as central bankers commit to staying data dependent, shifting their thinking alongside new information, several policymakers see the threats facing the labor market as more imposing than persistent inflation. Moving on, because we just talked about that. Home sales. U.S. new home sales surge in August. Sales of U.S. single-family homes surge in August, but the boost from declining mortgage rates could be limited by a weakening labor market. New home sales shot up 20% to a seasonally adjusted annualized rate of 800,000 units last month, the Commerce Department Census Bureau said on Wednesday. The sales pace for July was revised higher to a rate of 664,000 units from the previously reported pace of 652,000 units. Economists polled by Reuters had forecast new home sales, which make up about 14% U.S. sales, easing to a rate of 650,000 units. More drama. Bessent chides Powell for not championing interest rate cuts. Treasury Secretary Scott Bessent expressed disappointment that Federal Reserve Chair Jerome Powell hasn't clearly established an agenda for cutting interest rates. Quote, "Rates are too restrictive. They need to come down," Bessent told in an interview. "I'm a bit surprised that the chair hasn't signaled we have a destination before the year end of at least 100 to 150 basis points." Powell, in the remarks at an event in Rhode Island on Tuesday, said the central bank had to contend with both a weakening labor market and the risk of higher inflation as it weighs future decisions. More macro news. Truckload earnings estimates cut head into Q3 report. Susquehanna Financial Group cut earnings estimates for asset-backed truckload carriers by mid-single to low double-digit percentage ahead of the third quarter earnings season. Analysts made similar reductions for the fourth quarter as volumes, spot rate, and tender rejections remain soft, and the outlook for peak season is muted. Tariffs torching U.S. container imports, according to analysts. Containerized imports through American ports are set to take an historic plunge in September, and analysts predicts as President Trump's China tariffs take a toll on the busiest trans-Pacific trade route. And on that note, thank you very much, everybody, and I will chat with you all next time. Take care.